Okay students, so I welcome you once again on my channel. Now we would be starting the second book of business studies of our class 12. As you know that I keep experimenting in the learning process. So this time I have decided that I would be following the self-learning mode. Like we did study the unit directing by seeing the movie Mission Mangal. We were seeing the movie together and I kept on pausing it and then we discussed it. The points of the entire syllabus of the unit directing. Right? So here you will have to be very honest. This is one thing which you have to remember it. Okay. So in this, whenever I say that please pause the video and answer these questions, I'll be asking you a lot of questions. So you have to answer those questions in writing. You can type it. I would love it if you write it in the comment of the YouTube. Otherwise, you can send it me through mail, through Twitter, through Instagram, as you wish. Right? So, but do answer those questions. This is very important. And then go ahead. Then actually you will get the 100% benefit of this module. Otherwise, this would be useless for you. So please remember, my student, follow it honestly and do it. Okay, so in this unit, Financial Management, Unit 9, what we have to study is being shown here. The first thing is that we need to discuss about the concept, role and objectives of financial management. Then we have to talk about the financial decisions. Okay, there are three decisions mainly: investment, financing and dividend. We'll talk about this later on. Then another thing which we have to discuss is about the financial planning and capital structure and fixed and working capital. Okay, so this much is your syllabus. Okay, students, I want to share a case study with you. This has happened in year 2007 by Tata Steel when he acquired a company called Chorus. Okay, so I would ask you to read this case study thoroughly. Okay, I'm giving you some time. You just go through this case study and then we will move further. You can pause here the video and read it. Okay, now I'm going to highlight some of the words for you. Okay, so you just go through this. The one word here mentioned, say this, financial decisions. Can you see it? Okay, then to finance, and then one word is there, debt. So you please note down all these words which I am highlighting. Preference share, I think this you have already studied, you know about it. Then invest, to finance the takeover. Then there is a very important word called debt or equity. This will be talking many times. Then financing decision, capital structure. Then you see this acquiring Chorus will have certain effect also. And what are those effect? Effect on the competitiveness of Tata Steel. Then dividend paying capacity would be affected. Cash outflow, higher debt, paying any dividends, degree of risk, the future of the organization, and all these decisions are almost irrevocable. Okay, so you just the word which I have highlighted, you please note down it and try to find out the meaning of these words, and we would be discussing these all these words in this chapter, correct? Then actually this case study would be very clear in your understanding. After highlighting these words, now I'm going to ask you few questions. So now again you need to pause the video here and you please write the answer of these. Means, see, this word finance is not new for you. I think you all have heard about it. True? So you find out that what is your understanding about the finance. Okay, now the second question is that do you need finance? And if your answer is yes, that you need finance, then please tell me why you need finance. Please write about it also. Okay, now I am asking that why we need. We need means why people need finance, or why a businessman need finance. Okay, why your parents need finance. So think about it and write about it. Okay, now if this much you have done, then I will take you a step forward at what is business finance. Okay, without taking the help of the book, first I would request you to write in your own words what is your understanding about all these terms, and then finally I would request you to write that what is financial management. Okay, so if this work you have done honestly, if you have written all these things in your own words, then actually this topic is going to be very easy for you. Okay, so now let us understand it. See, if you write this word finance in Google, then you will get this meaning. Finance is here the management of large amount of money, especially by government or any large company. This word finance is used not only as a noun but sometimes as a verb also. So if you are using this word as a verb, then it means providing funding for a person or an organization or enterprise, right? Here the use in the sentence, it has been written here, the health service is financed almost entirely by the taxpayer. Okay, so here the Hindi word is also given. I think these words are also not unknown for you. You already must have heard about these things, correct? So with this, what is our understanding now? That finance is the fund, right? Have you heard people saying that, okay, let us go for a movie? Now sometime among your friend circle also you talk that let us go to watch a movie, and then suddenly someone will ask a question or will raise a question that, okay, tell me who will finance, correct? So actually he want to say that who will fund for this, who will have the arrangement of money for this, correct? I am sure that you must have asked your parents that please I want to buy this new mobile phone, I want to buy this, the laptop, or you must have said that I want to buy this bike, right? So many of the time your parents must have replied you, see my dear, right now we don't have that much finance to buy it. Or no, if we straight we talk in Hindi, we say रुक जाओ अभी पैसे नहीं हैं. So this word paise means finance. This paise means fund, right? So some people may say that no, right now we don't have fund for this. Okay. Now take the example of the corporate world. So finance can be used as a fund. In general meaning, we can say that finance is fund. Though it's a broad term, it describes, almost all the activities which are associated with banking, leverage, debt, credit, capital market, money market, and investment. So basically, finance represents money management and the process of acquiring needed funds, right? Or we may say that finance is the activity or business of managing money, especially for a company or a government. This also can be said as a meaning of the word finance. Now in the corporate world also it is very common to use this word in their conversation. Suppose there is a meeting going on between the CEO of the organization and the marketing manager. So marketing manager is requesting that we need to spend more money on advertisement. Now the CEO may reply, sorry sir, this year we don't have fund to increase the expenditure of advertisement. Correct? So now with this conversation, I think you are clear about this, that what is finance, and the similar word for finance is fund, and the fund means a sum of money which you have saved or made available for a particular purpose, right? In the same way, in business, the fund is the financial resource or a large stock or supply of something, especially the information or knowledge, that is also called a fund. That is also used sometime as fund, like fund of information, right? So if you could have just search it in your Google, then you could have got this meaning of finance and fund. But my dear student, this is just for your common understanding that what is finance, what is fund. But when we talk about business finance, it is completely different thing at all. Now here when we will say that find business finance, now see the finance word can be replaced with the word fund. So can we say that the fund required for carrying out the business activities is called business finance or business fund? Or in another word we can say that the money required for carrying out business activities is called business finance. So almost all the business activities require some kind of finance. So finance can be called as the lifeblood of business. Like a human being's existence is not possible without blood. So same way business is not possible without finance. It is as important as oxygen for a human being. The same way finance is also important for business. For almost all the activities you need finance. You want to establish a business, you need finance. You want to run your business, you need finance. You want to modernize your business, you need finance. And when you want to expand your business, you need finance. Or you want to diversify it, you are producing something, you want to produce something else, then also you need finance, right? And when you want to buy the assets of the organization, assets for the organization, then also you need finance. The assets may be tangible like machinery, factories, building, or the assets may be intangible also like trademark, patents, and the technical expertise, license. For all these things also you need finance. So finance is central to run the day-to-day operations of a business. Correct? Like you want to buy the materials, you want to pay the bills, you want to pay salaries to your employees, you want to spend money on collecting cash from your customers, right? Then also you need to spend something. That is also finance. So actually finance is needed at every stage in life of business, and the availability of adequate finance is very, very crucial for the survival and growth of a business. Are you getting it? Okay, now I would like to come back again to this case. See, in this case, all these decisions, means this particular decision which Tata Steel took to acquire Chorus company, it must have required very, very careful financial planning, right? They must have understood what would be the result of this takeover on the capital structure of the company, how much risky it is, or how it is going to be the profitable for the enterprise. So profitability part they must have discussed among themselves before doing this. So all these have a bearing on the shareholders as well as the employees of the organizations also. So they require an understanding of business finance. The major financial decision area, like financial risk, working capital requirement of the business. So all these things you have to have a good knowledge about it to make such type of major decision like this Tata Steel has taken. So without any doubt, you can say that the success of business mainly depends on how well finance is invested in the assets and how well you are doing the operations of the business, how timely, or you can say at very lesser cost the finance is being arranged from outside or from within the business. So with this understanding, now with this understanding, now it would be, I think, very easy for you to understand that what is financial management. Now, my dear student, you already know that what is management. This you have discussed thoroughly. All the functions of management you have completed. So, I would not go much into much detail of this word management. Now, I have talked about that what is finance. So, if we connect these two words together, finance and then plus management, right? So now we can understand and we can define it easily. Okay, so basically financial management is concerned with optimal procurement. Procurement means arrangement of, or we may say that procurement means a process of finding and agreeing to terms and acquiring goods or services or whatever we are talking about. So arrangement, acquisition. So all these words would be, I think, suitable for procurement, as well as the uses of finance. So two things are very important in financial management. Basically, what a financial manager has to do, he need to ensure that at the right time, when they need fund, when they need finance, it should be available there. So the first thing is that they need to ensure the procurement of finance, correct? And then they need to ensure that these should be used properly. So utilization of finance, where it will be done. So basically he has to ensure these two things. One is that optimal procurement means the arrangement of finance, means the sources of the finance from where you will get it, and the second is that how will you utilize it or where you will use it. So buying an asset is use of the finance, right? When you want to buy the assets, you need to use the finance. When you have to pay the salary, you are using finance, correct? And when you want to, or from where you will get this money, suppose you are taking loan from the bank, so this is procurement of finance. You are selling your product, your services, so from the revenue you will get finance. So this is procurement of finance. So basically he has to deal in two things. One is coming of finance and another is going of finance. So in these simple words, I think you would be able to understand it correctly. So for optimal procurement, you have to have the different available sources of finance. You need to identify them, and then you will compare in terms of their cost and associated risk, because all finance comes at some cost. So it is quite imperative that it needs to be carefully managed. So similarly, the finance so procured needs to be invested in a manner that the returns from the investment exceed the cost at which this procurement has taken place, right? Otherwise it is useless. Getting it? So financial management basically aims at reducing the cost of fund procured, keeping the risk under control, and achieving effective deployment of such funds. So it has to ensure availability of enough funds whenever it is required, as well as avoiding idle finance also. It should not happen that unnecessary you are having finance which is not required. Just money lying in bank is useless if it is not being used productively. So it is needless to emphasize on this, that the future of a business mainly depends up to a great extent on the quality of its financial management. If your financial management is strong, definitely you are going to see the growth of the organization. Correct? Now let us talk about the importance of financial management. See, you cannot ignore the importance of financial management. This is in fact the role of financial management because it has a direct bearing on the financial health of a business. So the financial statement like a balance sheet, profit and loss account, it all reflects a firm's financial position and its financial health. So almost all items in the financial statement of a business are affected directly or indirectly through some financial management decisions. Some prominent example of the aspect being affected could be as under. First is the size and composition of fixed assets of the business. For example, a capital budgeting decision to invest a sum of rupees 100 crore in fixed assets of a business would raise the size of fixed assets block by this amount, right? So the size and the composition of fixed assets is greatly influenced by your financial decision, by financial management. Correct? Second is the quantum of current assets and its breakup into cash, inventory and other receivables. With an increase in the investment in fixed assets, there is a corresponding increase in the working capital requirement also. So the quantum of current assets is also influenced by financial management decision. Then the second thing is that the decision about the credit policy and inventory management, that also will affect the amount of debtors and inventory, right? And which in turn will affect the total current assets as well as their composition. Then the third point is the amount of long-term and short-term funds which is to be used. The financial management take decision regarding the proportion of long and short-term finance. So an organization raises more amount on long-term basis if it wants to remain more liquid. However, there is a choice between liquidity and profitability, and the long-term debt adversely affect profitability as they are costly if you compare it to the short-term debts, means the current liability. Then the fourth point is the long-term financing should be broken up in debt and equity. So the fourth is breakup of long-term financing into debt or equity. This is very simple to understand that financial management decisions also helps in fixing the ratio between debt and equity in the total long-term finance. Means the proportion to be raised by way of debt or equity. So the amount of debt, equity, share capital, preference share capital, all these are affected by the financing decision, which is a part of financial management. Getting it? Then the last point is all items in the profit and loss account, that is interest, expense, depreciation, all these. So higher amount of debt means higher interest expense in future. Similarly, use of higher equity may entail higher payment of dividends. And likewise, an expansion of business which is a result of capital budgeting decision is likely to affect the virtually all items in the profit and loss account of the business. What I want to convey here that the financial management decision affect all the items in the profit and loss account of the business. For example, use of more debt means you are taking loan from outside, means higher interest expenses in future, and use of more equity involve higher dividend payment. Similarly, an expansion of business which is a result of capital budgeting decision is likely to affect all items in the profit and loss account of the business. So it can be said here that the financial statement of a business are largely determined by financial management decision taken earlier. Similarly, future financial statement would depend upon past as well as current financial decision. So effective financial management helps in mobilization of financial resources at a lower cost and deployment of these in the most profitable activities. I know for some of you this could have been little difficult to grasp it. Now I am going to make it very easy for you. Just have a look on it. So my dear student, you remember I said that almost all items in the financial statement of a business are affected directly or indirectly through some financial management decision. So all these 5 points which you found little difficult to remember, now it would be very easy for you. If you see this specimen of balance sheet, financial statement has two part of it. One is the position statement that we call balance sheet of the company, okay, and another is income statement, that is profit and loss account, profit and loss statement of any organization. Correct. So the first heading in this is the size and the composition of fixed assets of the business. So here it is being talked about this aspect. Getting it? So the first point is this. Then the second heading is current asset. When I talked about the quantum of current assets and its breakup into inventory, trade receivables, cash and cash equivalents. So all these things. So this is your second heading to remember, right? The third heading was what? Third heading was the amount of long-term and short-term fund to be used. So this is here. So this you can say the third heading, long term. This is your short term. So here we are talking about the liabilities, aspect of this. Fourth heading is the breakup of long term financing into debt and equity. So can you see here? This is called your fourth heading. How much would be the shareholders fund? This is called as your equity. And how much would be the non-current liabilities and current liability, means non-current liability. So how much would be the debt? So this is your equity and this is your debt. And then the fifth heading is all about your income statement, means the profit and loss statement, where we said that all items in the profit and loss account, whether it is your expense of any nature, all these things will have an impact on the profit. All these will have impact on earning per equity share. So these are the things which is going to determine what would be your profit or loss. So this is your fifth heading, right? So in this way all these 5 points of you can easily learn, right? So like this is what? Fixed assets, first point. Then current assets. So the asset side of the balance sheet in 2 points. Then long term and short term funds. So again we are talking about the liability side. And then in the liability side, the long term finance to be divided into two, debt and equity. And then this fifth is all about the profit and loss account, means the income statement. Correct? So in this way, with the help, just you imagine the specimen of balance sheet and income statement, profit and loss account, immediately you would be able to write about these 5 points. Correct? Now tell me, it is easy or not? So next day we will be talking about the objective of financial management. So it would be better if you just go through it. So be prepared for my next question. Okay students, so the homework is for you that please try to find out the meaning of these terms. Just meaning, whatever is your understanding, definitely I am going to explain all these things into detail. But as I said that this is, we would be learning this chapter using the self-learning module. So first you find out that what are the meaning of these terms, like dividend, inventory, capital budgeting decision, fixed capital, working capital, liquidity, profitability, debt, equity. What are all these terms? Okay, so find out your own meaning, write about it in the comment of this channel with your name. Okay, and then in the coming videos I would be discussing all these things in detail. Thank you student. Happy learning.